Bybit was hacked yesterday, and we've seen the largest cryptocurrency exchange hack in history. Over $1.4 billion in Ethereum were stolen, and the question is, how does it actually impact the market? How does it impact the Ethereum chart? We'll take a look at that today. Let's go. Hello and welcome to another video by MCO. My name is Ben, and today we want to take a look at what actually happened to Bybit. I don't want to spend much time on it. It's really just a brief exploration, brief recap for anybody who's not aware of it. It is important to do that because it will set the stage for what's coming afterwards, which is an exploration into what actually changes prices, what moves prices, what creates these beautiful Elliott Wave patterns on the charts that we are looking at every single day. Because a lot of you have asked me, how does actually this Bybit hack impact the Ethereum chart? And these stolen funds, what if they sell them all? Will it have a major impact on the market? So I will take a look at what actually changes the market prices from a probabilistic point of view. What has an impact? And then we'll take a look at the Ethereum chart itself, the long-term chart, and also we'll compare Ethereum's long-term chart to Bitcoin. So we'll take a look at the ETH BTC chart. How are they actually doing? What could be coming for Ethereum in the coming weeks, months, but also years? So I think the first step is we'll take a quick look at an article that we've posted on the website MCO Global. I'll post a link for you in the description. I mean, I'm not going to go through the entire article, just a few things. And at the end of that article, and you can read through that in your own time if you want to, it explains in detail actually what happened, what exactly happened step by step during that hack. How were the funds actually stolen? Okay, so with Bybit being one of the major exchanges worldwide, obviously everybody's talked about that hack. I mean, this is not a normal, oh look, there was a hack and I'll tell you what happened. No, but I need to set the stage. So for anybody who's not aware of it, what happened, and then we'll take a look at the actual things. But it's important that you are aware of it so we can properly address it going forward here in the video. Now, first of all, there was the largest hack in its history of the cryptocurrency sector, over 1.4 billion in Ethereum. Behind it, probably North Korea's Lazarus group. So what happened? The attackers tricked the signers. So it's a multi-sig wallet. Multiple people at Bybit needed to sign. And they tricked the signers into approving a malicious contract change, effectively giving them control over the wallet. Okay, so again, what in detail happened, you'll find at the end of the article. CZ, Binance founder, noted that similar attacks have been carried out on other platforms. Okay, so you'll see that more and more, raising concerns about the security of exactly this multi-sig wallet solution. Interesting is that Bybit, even though there were concerns initially, right? 1.4 billion is quite a bit of money. There were concerns that they might not be able to service withdrawals, but actually they have done that, and all of these withdrawal requests have been processed. Yep, there were delays, but you can understand that they needed a bit more time yesterday. But Ben, Bybit CEO, great name by the way, has emphasized that the exchange never halted withdrawals. Okay, that was also criticized here and there, but yeah, he didn't want to halt withdrawals. I find he managed that in a really good way. Okay, there are different opinions. Let me know in the comments, but let me know in the comments what you think. Did they manage it in a good way? Overall, he kept the community up to date. He said that 99.99% of withdrawals have been completed. Well, I'm sure now 100%, hopefully. But yeah, so pretty much everything was done, processed. But yeah, this is the Lazarus group. In case you don't know, they apparently striked again. And the same hacker wallets used so they have the same wallets basically. They were involved in the $29 million Phemex hack in January. All right. North Korean hackers stole over 1.34 billion in 2024 alone, accounting for 61% of all crypto thefts. In that year. So that's all quite a lot. I mean, they hack. They are responsible for the majority of hacks in the crypto industry. It's crazy, yeah. So yeah, just be aware of that. And then just some tips. I mean, just be aware, because I've seen it in the chat rooms. how can that happen? Shouldn't these wallets be 100% safe? I mean, there's never 100% safety, okay? So cold storage isn't always safe. These multi-sig wallets aren't foolproof. In this case, to a degree, it was human error as well. So just be aware that you need to understand fully the risks also when you use those wallets, because, I mean, any cold wallet really, because don't think it's 100% safe. Self-custody, you're responsible for it, and it's important to know the pros and cons for each, okay? Okay, so that's all of that. Now, what I wanted to share with you is something that I wrote a few years ago, which is my, I thought about how can I actually explain the effects, because people always think that something happens, it must have an immediate effect on the price. And that's just more of a general thing, right? So maybe even from a philosophical point of view, how are prices actually shaped and formed? And a lot of people don't understand how that actually works. People only see the patterns, they only see the surface. People see, okay, there's a fib area on the chart, the price likely will react to it or not. Oh, it doesn't react, oh, Elliott Wave doesn't work. Or people see, I don't know, they just see a wedge pattern and they think that might somehow move the prices or something. It's not like that. So I thought about how can I actually explain how markets really work. And I thought about something that I wrote in my doctoral thesis years ago, because I studied a topic which is not directly related to financial markets, but the concept behind it is how reality works, obviously. And that was all related it was all related to probabilities and how potentials which exist all around us in the quantum field manifest through certain collapses of certain waves, and they manifest as what we see everywhere in life. Could be anything. It's not related to wave patterns on the charts, right? But this is a great image, so I thought, well, that is actually really good example to show you what actually happened. So this is obviously an image, and I can zoom in a little bit. This is an image of, well, you could say the ocean, and then you have here a rock formation, and what you can see here are ripple effects behind the rock. So as the water hits those rock formations, you see beautiful wave patterns here, okay? So how does that relate to the wave patterns we actually see on the charts? Well, it is important to understand that the waves that we see on the charts, they are only a manifestation of what is happening in the background. In the background, you could say in the quantum field, there is an infinite potential. Really anything is possible, which is always why if someone asks me, could it be this, could it be that, is this possible? I always say everything is possible, but it's all about probabilities, okay? And the Elliott Wave method helps us to understand which of these wave patterns is most likely going to unfold. Now, what's happening here? So you could think about it in a way that those wave patterns that you see here, I mean, they are actually what we see on the chart. They are the visual ripple effects that are created based on certain structural elements. Up here, like an infinite potential of possibilities. Then you see all these rock formations. They could be sentiment structurally. So that's sort of what structurally leads to the creation of waves, like on a long-term chart, like Bitcoin's long-term waves. Yeah? But in addition to that, you might have some news events. You might have some liquidity aspects. They are all the rocks, okay? And depending on how the rocks are shaped, different patterns are created. I think it is quite easy to visualize. Now, you might say, okay, but the rocks never change. That is not true. Rocks also change. The water itself changes the rocks over time, okay? They get smaller, they get polished. Important is to understand that there are structural elements that create these patterns in a probabilistic way, yeah, not in a deterministic way. And now, how does that news event come into play? So you need to think about it. We've got all these structural elements. They are not easily changing, right? So sentiment, mass sentiment, that's not going to change from today to tomorrow unless someone actually takes out the rock, okay? Which can happen, black swan event. But they are not easily changing. Interest rates, they're not changing that fast. So you could see all of that as structural elements that create these shapes. And this is also why underlying patterns often don't change. That there is something that is stable, especially the larger time frames. But then just imagine someone comes in, throws a pebble into the water. So it will create ripple effects. So that can create small disturbances in the chart. And that is exactly what we might see on a smaller time frame chart. a news event surely has an impact. But is it really large enough to change the structural elements? Most likely not. I actually posted this today on X, which pretty much explains it. So you could also read through it. I think it can be a really helpful post. And I'm going to read that out and then we'll take a look at the chart. Markets don't just react to events. They emerge, unfold and manifest from a deeper field of potentiality. One, where every possible wave structure exists in probability until sentiment, liquidity and external forces cause a specific path to materialize. People often do not understand the underlying forces of market movements beyond simple patterns and Fibonacci levels. What we see on the chart is not the market only responding to news and external events. People think that, right? There's an event, CPI data, interest rate decision. People think that makes the market now to move in a certain way. No. Instead, the market is like a quantum field of probability where all potential price movements exist. Everything is possible, always, like everywhere in life, everything is possible. It's just not everything is probable. Now, the act of sentiment, mass sentiment, liquidity, and market structure, and there are other aspects as well, too many to know really, but they all interact. This collapses these possibilities, which are infinite, into what we observe as an Elliott wave formation. That's just the manifestation, right? So this is why Elliott wave works, because markets are shaped by deep structural forces in the background, not just surface level news events. Again, people who think that's always the news event that makes it, that changes the structure. Okay, you might think Elliott wave doesn't work, but it's not that. It's not the news event that changes the chart. It might create disturbances. People think price moves because of news. No, price follows a natural unfolding process shaped by sentiment, liquidity, and probabilistic interference. It's the interferences of different functions. News is just one of many interferences that can slightly alter the path of an already existing wave structure. So there's an underlying pattern. The question is that news event large enough to create a major disturbance? Yeah, is it a major rock that is being thrown into the water that really creates that maybe even breaks the existing rocks? Okay, just to visualize that, because I think it is easier with an analogy like that. And this is the core principle of mastering Elliott wave. You're not predicting price. You're tracking the collapse of probabilistic potential, infinite potential, into structured waves. And this is an ongoing process. It's not set in stone, which is why we have to change our opinion when things happen, okay? When someone's throwing a rock into the water that's large enough to create an interference that creates a larger disturbance, which could be a lasting change, really. So this is the long-term chart for Ethereum. So, bottom line is, did that event really do much? We saw a small sell-off yesterday. You could argue maybe that was a small disturbance, yeah, in the larger wave pattern. It didn't really lead to much movement. And at the moment, I don't think there is any evidence, because markets are forward-looking, that would tell us, so expectations play into that as well. Any expectations that are being priced in. So again, it's an ongoing process, shaping markets. And yeah, but I don't see any evidence that it's really having an impact. Okay, maybe there would be a short-term impact if they were selling everything at once on a centralized exchange, which they are not doing apparently. So I think they found some on DEXs. I don't know. It's sort of step by step. They have sold some, but it's not that it's suddenly hitting exchanges and having it's not like these orders are working their way through the order book. By the way, if you want me also to take maybe in one of the videos, take a look at how an order book works, let me know in the comments, because that's sort of more the surface level explanation than how are prices actually made live on the exchange. But that's more the effect of it. That's more the effect of sentiment and everything. It's what I showed you today is more the underlying thing, more on a deeper level. But yeah, let me know in the comments. But yeah, I don't see any major effect. Now, interestingly, also the NASDAQ sold off yesterday. So I think that had a greater effect. Yeah. So it also created a disturbance, but it was a much greater effect. The stock market sold off quite strongly. So yeah, that one event didn't have a major impact, and it doesn't seem to have a great impact for Ethereum. I think it more than on the price, it has an impact on how exchanges now will double down on the security aspect. Now, looking at the Ethereum chart, we can see here on the long-term chart, and that's what I promised you. We'll take a look at the long-term chart. I rarely show this one in public. So it is one that you have live access to in our crypto service, which you can join on mcoglobal.com if you're interested. You get access to all these live charts essentially. And yeah, what we have here is a 5-wave pattern in development. That's the idea. So from the beginning, Ethereum developed a wave 1 and a wave 2. That's always the first rally in an uptrend and the pullback in wave 2. If it's forming a higher low, it is typically the setup that will lead to a third wave rally, which creates then typically new all-time highs and is typically the most aggressive rally, which is also why Ethereum really did well in 2017. And then we had a wave 4 pullback, and then here 1, 2 in wave 5. So wave 5 is also a 5-wave move. And you can see that this third wave again did really well. Third waves are typically the strongest waves in a cycle. Now the wave 1 was also very strong, but please note that this was the startup candle. So this was really just the very beginning, okay? Maybe even market sentiment wasn't that relevant at the time. And then we had a wave 4 pullback, which was presumably the bear market low in 2022. And we could now be in a 5th wave of a 5th wave, similar to Bitcoin, the last wave of a larger time frame 5-wave pattern. And pretty much we are on the last, this trend could be on its last legs, you could say. And there are other interpretations, however. Now the problem with all of this is that this entire chart is an impulse, which is great. Okay, the problem is this 5th wave seems to be an ending diagonal. If it is wave 5 of 5, because there are alternative pathways, which I will discuss with you today. So primary count though is that we're moving up in this 5th wave of a 5th wave. And it is not impulsive. You see the structure that developed from the 2022 low is completely different to what we had here in these rallies before. It's much slower, very, very choppy. And yeah, I mean, it's only a 3-wave move up as well. So ideally we see one more high, and that could complete the larger cycle, because this would be wave 1, wave 2, wave 3, 4 here or here, and then wave 5. So we are, in my view, probably in the late stages of this larger rally. Hold on, I just need to change here the wave degree. So we seem to be in the last stages. So this wave 4 has technically space all the way down to 1800. Anything below 1800 indicates a different wave pattern could be playing out. So this is where we have a key level like 1800, and where we'll understand that probabilities start to change below that level. Okay, so probabilities are starting to shift. And again, example from before, if something hits the market that creates a ripple effect that's large enough to create disturbances for Ethereum to break support, well, it's going to go lower to this area then, yeah? And the assumption would then have to be that we never finished the bear market, because in this scenario, the wave 4 is still unfolding. It could even be when a wave 4 is still unfolding, it might even form a triangle, but there's no evidence for it. Triangle would be A wave, B wave, C wave, D wave, E wave, higher lows and lower highs, long sideways, and then we go up. But likelihood is if something hits the market and maybe also Bitcoin goes down, that it's not going to form a triangle probably, but the larger 4 with possible target round about 988 to 623. But then the good news is, if that happens, it wouldn't be long-term bearish. The chart would have a chance to outperform Bitcoin as well in a 5th wave then, okay? It would simply delay that 5th wave. That's my view. So overall, we're just at the moment waiting for some clarification if we get one more high, or if we're breaking down. That would delay surely the bull run. And what seemed like a bull run was only a B wave. And I mean, this is likely because this rally is really just super choppy. Now, the white scenario, as long as we're above support, I'm looking at higher. We can keep it very simple. I'm looking at higher prices as long as above support. I will look at lower prices below support. It's very simple, and the $1,800 level is going to be the key pivot for me that distinguishes between bullish and bearish momentum. And what can happen then? After the, let's say, bull market top, different ways of how this can be calculated. There are different wave patterns that we can track here. One target area points towards 5,580 to 9,330. There's an additional level around 5,400. So there seems to be a bit confluence there in the area here around 5,400, 5,500. But a rally to around about 7,600 would give us a more healthy fifth wave. Once we have all 5 waves completed, we don't even know if the white count is playing out. It's the assumption at the moment. But once these 5 waves are completed, we're going to experience probably a very, very strong wave 2, which would probably send us back into the region of the 2022 lows in a wave 2. I don't expect, all of this to be corrected. What we often see is that a wave 2 corrects the price down into the region of a previous wave 4. Now, Elliott Wave guidelines suggest a wave 4 of 1 lesser degree. Well, that might be here in the area around $100. I think we will first find some support in this area around 1,000. Okay, so I would say we'll first check if the price finds support there. And then if it breaks certain support levels, which I can't define at this stage because we haven't got a top yet, then we will have to expect price to dip into the $100 region. Is that realistic? Maybe yes, maybe no. You might say no. And it would be quite a strong sell-off. So depending on how high Ethereum goes, once the correction starts, we can define support levels. It's too early for that. I would first say probably more in the area around 1,000. Yeah, but it again depends on how high we go. So there will be a Fibonacci support area on the chart. What I also wanted to share with you is the ETH BTC chart, Ethereum, Bitcoin, and does actually Ethereum have a chance to outperform Bitcoin long term? And yeah, everything's possible. So there's always a chance, but in this entire bull market, for those of you who know our long-term charts, and also for those of you who follow the More Crypto Online channel, I haven't been bullish on Ethereum. I have been bullish on Ethereum, but not versus Bitcoin in this cycle. There have been 1 or 2 attempts of Ethereum to outperform Bitcoin in this cycle, but it's failed. So there are 2 patterns. First of all, the initial rally is a 3-wave move. That's not great, okay? That's not great. So it's not really trending. A 3-wave move up is not a proper uptrend. We then saw the start of a correction. I mean, I'm tracking that as a 1-2 setup and then wanted as a diagonal. So then wanted to see, okay, is this an A wave? Is this a B wave? We might see a C wave rally. Ethereum might outperform Bitcoin. Below 0.02, this will become less likely. It will be invalidated below 0.015, and then a larger B wave is unfolding, and then there's a potential for Ethereum to drop much more compared to Bitcoin. So essentially, for me, it's about assuming, yes, we are now in an area where a reversal could happen. I'm not expecting a reversal. If there is a signal for it, that will be my signal as well to assume we're now going up. And again, that is how well is Ethereum doing compared to Bitcoin. And we need some kind of a signal down here, minimally a so-called 1-2 setup to the upside and a break above this signal line at around 0.032. I think there's a potential for Ethereum to do that from here, but there is not enough evidence. Yeah, and if there is a 1-2 setup, there will still be time to act. At the moment, Ethereum is underperforming. I hope that will change at some point. It would be good for the entire altcoin sector, but for now, the trend is down. And there is a long-term chart, yes, a long-term chance for Ethereum to outperform either from here or after that deep B wave. But then again, whatever is happening, this is currently a downtrend, which hasn't slowed down yet. So we're just watching it for, especially when we approach key levels, to see if there are reactions. For now, there is no reaction. So there's no need to assume that Ethereum will suddenly start to outperform. Yeah, so that's the update. Hope you enjoyed it. Let me know in the comments if you have any other suggestions for certain topics. And yeah, hit the like button, leave a comment. It would help the channel a lot. Thank you very much. Bye-bye.